All right, taking a look at futures this morning. You just had the Dow dip down into the negative there. Dow is now down 13 points. We were higher earlier. S&P is still higher by 13. NASDAQ up by 206. All about tech stocks right now. Yields right now ahead of the Federal Reserve's rate decision, 2 p.m. Eastern time. As you can see, we're down just by 0.3 basis points, 4.242%. The central bank widely expected to hold rates steady after 3 consecutive cuts last year. Fed Chair Jake Powell will speak at 2:30 p.m. Eastern time. Investors are going to be watching for any clues on the future rate cut path, and of course any comments from Powell around the Fed's independence. Meanwhile, the president says he's soon going to announce his choice to lead the Federal Reserve, predicting that rates would come down once the new chair takes over. Let's bring in Piper Sandler Managing Director and Senior Economist Jake Oubina. Jake, let's move to the Fed. Yeah. There's a lot. The press conference is going to be interesting. Is he going to be asked? Obviously, he will be about any DOJ investigation into him and his comments there. Is he going to talk about his future, whether he's going to stay on after his chairmanship is over?
My sense is he'll keep his cards close to the vest on this one, and I don't think he's going to get into the investigation.
He'll be asked about it.
He'll definitely be asked about it. He'll shy away from that. Yeah. And I think for the Fed, look, today they're going to be on hold. I think now the market's pricing about 2 more cuts this year, which is consistent with where we are. I think it's also consistent with this tension that you've seen recently with the unemployment rate, where it looked like it was heading much higher over near term, and then we got that nice surprise in the last employment report where it actually ticked down a couple of tenths. There's still some near-term risk there. If you look at Conference Board yesterday, the consumer still doesn't feel great about the labor backdrop. That suggests a higher unemployment in the near term. Mm-hmm. But then you look at things like small business hiring intentions, and they've inflected higher over the last few months. That's the best leading indicator of unemployment with a 6-month lead time, and that tells you unemployment's going down in the next 6 months.
So it's about the data. It's about the data coming in.
It's totally about the data, and I think that's why we've put off the cut today, and it was really the unemployment number that did that.
Adam, I bet Jerome Powell really wants to go back to being data dependent right now.
Oh, of course he does. He wants to get rid of the noise because he has always been a data dependent leader of the Fed. He's also a gradualist, which is, I think, why he's pausing today. He's made very clear he's not going to do anything that happens quickly or that's jarring to the markets. I think what he says about the timing, do you think, Jake, he's actually going to give us a sense for the timing, or is he just going to be nebulous and say, it's data dependent? Yeah.
I think it's totally data dependent because I don't think they know, right? Unemployment could very well be heading south here. And look, we're getting a ton of stimulus into the economy in the first half of this year. You guys mentioned tax refunds earlier.
Right.
The refunds plus the lower withholding on the individual side is $200 billion this year. Okay. We've got CapEx depreciation that's already showing through in lower corporate cash tax rates. Corporate tax collections are down $250 billion year to year in the fourth quarter of 2025, right? So that's already showing through. And then you've got tariffs, which are going to be lower in 2026, right? If the court rules against Trump on IEEPA, we can reconstitute some of those with 122. It's limited in timing. It's limited in scope. I think you're $100 billion lower in tariffs this year. That's been a headwind to companies vis-a-vis margins. That's been a headwind on employment. You've got almost 2% of GDP in fiscal impulse.
The president did say, though, yesterday, he said this repeatedly, there are other mechanisms for tariffs. Sure. Even if the Supreme Court rules against him, he's got other ways.
This is inclusive of that.
Oh,
right?
You
so
are
if he does
including that
122,
okay.
122 reconstitutes about 75% of IEEPA tariffs.
Interesting.
Okay, we're still going to be in the lower tariff world.
I want to ask you about the dollar, because the dollar index sank to a new 4-year low. President Trump, though, say he is not concerned. He's instead calling the dollar's decline great. He says he wants the currency to find its own level. Watch these comments on the dollar.
I think it's great. I mean, the value of the dollar. Look at the business we're doing. No, dollar's doing great. You know, it's very interesting. If you look at China and Japan, I used to fight like hell with them because they always wanted to devalue their yen. You know that? The yen and the yuan. And they'd always want to devalue it. And I said, not fair that you devalue because it's hard to compete when they devalue. But they always fought, no, our dollar's very good. I'd want it to be just seek its own level, which is the fair thing to do.
So we're seeing a decline in the dollar, Jake, but then we're seeing gold and silver continue to hit new record highs.
Yeah, well, gold and silver, we look at them priced in dollars, so that's not surprising, right?
Dollar goes down, so by definition, they have to go up.
Exactly.
Buy more gold.
I would say, though, I'm not concerned about the value of the dollar. So, yes, we look at it in DXY terms, and it's at a 4-year low. We can't look at it in that way. We look at the dollar in a trade-weighted basis, look at our 20-plus top partners, And the dollar still looks very strong historically. I encourage everybody to look at the trade-weighted dollar, zoom out on the chart, and look at where the dollar is. We're 10% off the all-time high.
Yeah.
I'm not worried about that.
Yeah, well, Jake, certainly there's a lot to go into. Earnings are coming up. I know from an economic standpoint, we're still looking at all these data centers being built out. We do expect more news on that. That's an economic positive.
Absolutely.
For 2026.
Not even talk about that. That's aside from the fiscal stimulus, right, that I mentioned. But you look at the big tech companies and all the CapEx commitments they've made already for 2026.
Yeah.
That gets us over 10% CapEx growth this year alone, just with the commitment. So we'll be looking at those as the earnings come out over the next few days.
There's going to be a lot of questions about the data center build-outs and AI in general. A lot of earnings coming out of the bell, so we're going to be watching it.
$550 billion this year in AI spending.
It's incredible. Trillions, we heard in Davos.
Right.
All right, Jake, it's great to see you.
You too.
Jake Oubina, thank you so much always for coming in.